Hi, welcome to the Market Alert for Thursday, the 14th of January 2016. And in yesterday's Market Alert, I spoke about the historic lows, multi-year lows in crude oil, and I was right, it was 1998 the last time we had $10 a barrel for crude oil. This is a monthly chart. You can see this is taking out the green line, which is a 200 moving average. 2009 the market came back to this area in the credit crunch and then rallied back 3/4 of the way before we see this falling off a cliff type of price action there. The sort of elevator, staircase up, elevator down, and you can see the market taking out the 2008 lows now at $32 a barrel, and 1035 is the 1998 low if the market heads down this way. However, one thing to keep in mind that's not being mentioned in the mainstream is that the war between Saudi Arabia, teeth in this morning, and Iran could send oil prices up to $250 per barrel. Of course, that's not going to happen just yet, but it's something to keep in mind as to a quick turnaround in this market to see prices move back to the upside. The all-time high in this market is, if I can click on the right bar, is $147 per barrel, which was made in 2008. So you can see how volatile the crude oil market has been of late. Yesterday's economic news on oil as well came out with 200,000 barrels surplus as opposed to a negative. However, that didn't stop the market from moving lower yesterday either. So the market's reaction yesterday, we had a sell signal just into the session at 10 minutes to 3, which was just before the news, the high impact crude oil news. So if you were in this trade, as I happened to be at the time, 47-point loss as the market came out with the news taking this trade out. Now, there's no other trades in the first part of the session, as I've said many times in the Market Alert over the last few weeks, and I will say it again. If you don't get any trades in the first part of the session, have a look in the quiet period or just before we start the evening session as things start to liven up a bit. Instead of waiting until 6:30, go to 6 o'clock or 5 o'clock. And here you see we have a sell signal that then continues on down for a couple of 100 points. Recouping the loss on the one that was earlier in the session, which shouldn't have been done because we had the high impact news for crude oil, and crude oil is the backdrop at the moment, so one of the component parts along with China and the Fed increasing interest rates that is a reason to stand aside. Normally you wouldn't take any notice, and as I warned yesterday in the Market Alert, crude oil economic release, the inventories, the weekly inventory figures, has gone from a medium impact news item to a high impact news item, and as it says in the manual, and also as you've seen in the videos as well, Market Alerts and other training videos, that high impact news items can go against you, and this is what happened yesterday. Thought I'd take the gamble, but it didn't pay off. But fortunately later on in the session the losses are recouped. In the daily charts, even though the market was down yesterday, it's down from the previous day's close, which makes things look dramatic, but we only just took out yesterday's low and now we've pulled back this morning. And the reason we've pulled back this morning is purely and simply because the Shanghai market has come off the lows of the morning down here at 2874 and now back up, as you can see there, to 2986. They're doing their best to try and bring this one back above the 3000 level there. So just back to the daily, we've got this low over here at 16,000 is the next downside target if this market can't manage to move back to the upside. It tried yesterday in vain and then was slammed later on in the session when the market opened. Seems to be a pattern evolving at the moment that the market is higher in the pre-market session and then is sold into, and again we're seeing that strength there at the moment. On the economic news front today, we've got nothing after the market opens. Everything all of the news is released before, including Bullard speaking at 1:30, so he will be finished by the time the market opens as well. So again, we could see pre-market strength throughout the morning. When Bullard speaks, no doubt he's been wheeled out to give a positive spin on the correction, as they're probably calling it at the moment in the market, as opposed to a bear market, but we still are in correction territory officially. at this time. So we'll see what he's got to say and how the market plays out after that. In the implied volatility, 20.86, up obviously after yesterday's drop. You can see that reflected in the chart there. So we're still a long way to go yet before we have any potential bottom in the market. We need to see a dramatic sell-off before we get any sort of confirmation from the implied volatility like we had in August there. A big spike. If you get that big spike, then the market will stop for a while and then trade sideways. But at the moment we still have potential to move to the downside. On the Baltic Dry Index, again, just to show you how much of a global slowdown is around us at the moment. 394, down 8 points yesterday. If you have a look at the 5-year chart now, you can see we're really motoring to the downside. No goods being shipped, or a massive drop, I should say, in imports and exports. And this is not good as we go further down the line. So anybody who thinks that nothing's changed, wait until we get halfway through this year, when you'll see a massive slowdown in the global economy and a massive deflation as well. So again, sorry to be the bearer of bad news, but forewarned is forearmed, and expect more pressure in all of the markets. The currency markets are collapsing around us as well. Canadian dollar is in a terrible state, and again, if not being reported in any of the mainstream, but food prices in Canada at the moment, you can see, are looking a bit pricey, to say the least. If you look at some of the tweets that have been sent out, you can see a lot of expensive goods there. $15 just for a box of what are they called, Frosties. $31 just for some washing soap there. And what else have we got? There was one that was quite amazing, actually. I think it was a cauliflower. It'll be further up here. About $4 or $5 just for, $8 for a cauliflower. And this is the problem that's going on in the background. You've got you're going to see a massive inflationary price in exporting and importing of goods because of the decrease in valuations of the currency markets across the board. The US dollar strong at the moment, but again, once that one goes, then you'll see price increases across the board. And this is what the Fed and everybody else have wanted to get out of this debt, is hyperinflation. So you can see this is starting to also build in the background, but first we have to go through this deflationary period, which you're seeing with crude oil, Baltic Dry Index, and the commodities index as a whole. So once you step back and look at the bigger picture, you can see exactly where things are going. The downside in the markets are going to be the best side, unless it comes with one caveat, and that's the Fed go for QE4, which I have no doubts they will this year, even if they leave rates at their current level. Certainly no more rate increases. I can't see that happening. They know they've made a mistake, and they've gone very quiet since they did this. I mean, Bullard's the only one that's being wheeled out today. No sign of Yellen. Wherever she's gone, she's disappeared off the scene at the moment. And so the rest of them, apart from Fisher, who's grassing up the rest of the team, telling them how they rigged the markets over the weekend. So the whole thing's starting to fall apart around the Fed as well. So the rate increase they know was a mistake. That's why the markets are doing what they're doing. It's not just China or commodity prices and mainly the oil price. Absolutely not. They knew that beforehand. That already happened in August. And through last year, we saw an 80% decrease in the oil price. So how anybody could consider increasing rates when you have a backdrop of deflation coming, the Baltic Dry Index also making new lows at that time, is beyond me. But apparently these people are supposed to be very well educated, but for some unknown reason they seem to lack some sort of logic and common sense. But then again, that's no surprise at all. Right, that's it for me for this morning. I'll get off my soapbox now, and I will see you in tomorrow's. Have a great day, and as ever, thank you for your support. And with a bit of luck, we'll get less volatility today, which we tend to do in between the high volatility days as well. See you in tomorrow's edition. As ever, thanks for watching. See you in the next one.